Are you aware of the split of Tesla stock, which was 3-1? You have the potential to become wealthy with this. To find out, be sure to keep watching and tuning in. Undoubtedly, everyone aspires to be wealthy, especially those who put in enough effort to get a respectable living. Here's GIS. Many individuals view Tesla as a means of achieving two common life goals: becoming wealthy and retiring early. You'll learn how to profit greatly from the Tesla stock split 3-1. Many analysts and investors are constantly searching for stocks that are performing well, and most still view Tesla as a wise investment, even in light of its recent stock market performance. Since the stock market, including Tesla's, is so unpredictable, investors typically watch the stock's moves before making a purchase. Tesla is an American clean energy and automotive firm that designs and produces solar panels, solar roof tiles, electric automobiles, and battery energy storage ranging from residential to grid size. When Tesla Motors was first established, it produced electric vehicles. The company creates, develops, produces, rents, and markets energy generation and storage technologies, as well as electric cars in the US and other countries. The business is divided into two segments: energy generation and storage and automobiles. Renowned Tesla bull Adam Jonas of Morgan Stanley claims that the current EV market is a race that Tesla has so far been winning. In his metaphorical comparison of the electric vehicle EV sector to a marathon, he stated that Tesla is leading at mile 21, while other companies are just at mile 2. And as it was still tying their shoes, in order to bolster his argument, he provided data on recent car deliveries, which show that Tesla is still in a solid position and is getting stronger as the marathon goes on. In fact, analysts claim that Tesla is currently leading the EV industry. As a result, every news item regarding the company generates excitement, as demonstrated by the announcement of the most recent stock split. In a proxy statement with the Securities and Exchange Commission, Tesla stated, "We believe the stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity, all of which, in our view, may help maximize stockholder value." In the aforementioned SEC filing, it also stated, "We offer every employee the option of receiving equity. Unlike other manufacturers, our success depends on attracting and retaining excellent talent." The business stated, and Tesla was able to accomplish so, in part because of its extremely competitive compensation packages, which give every employee the opportunity to gain stock. Following board approval, Tesla recently revealed a possible 3-1 stock split, which made headlines. Recall that in August 2020, the company conducted a 5-for-1 stock split, and since then, its shares have increased by 3.5. Tesla said that its board of directors has decided to carry out a 3-to-1 stock split for the company's common stock. As retail investors have expressed a high level of interest in investing in our stock, we believe the stock split will also make our common stock more accessible to our retail shareholders, the company said. In other words, if you already hold one Tesla share, you will receive 2 more. They claim that this action will increase the availability of Tesla stock ownership for both investors and employees. The fact that this action is in part intended to increase individual investors' access to the company's shares is truly praiseworthy. The aforementioned statement was released following a 42% decline in the value of the company's shares this year. After hours, Tesla shares saw a gain of almost 1%, closing at $696.69 on the day of the announcement. Although our employees have benefited greatly from this value appreciation throughout the years, the filing stated that we want to ensure that all employees, regardless of when they join, have access to the same benefits. According to Tesla, a special dividend will be distributed to stockholders to carry out the Thor 1 equity split. As some may remember, Tesla announced in March of this year that it will request approval for the stock split during its annual meeting. The business is now revealing the details of that separation. The primary purpose of the authorized shares amendment is to facilitate a 3-for-1 split of our common stock in the form of a stock dividend, Tesla said in the same SEC filing. They went on to state that as of June 6, 2022, we had 1,036,390,569 outstanding shares of our common stock, and that the 2 billion authorized shares of our common stock as of right now are not enough to complete the stock split. Our board plans to approve the stock split, but only when the authorized shares modification has been approved by the stockholders A cosmetic split of the shares may indicate that smaller investors believe they may purchase the stock, despite the fact that their numbers pale in comparison to those of major institutions. Fractional trading is currently available to investors through several brokerages, enabling small investors to purchase a portion of equities that appear to be costly. To view more content about Tesla stocks, don't forget to hit the like and subscribe buttons. A stock split just divides a company's worth over a larger number of shares. It has no effect on the company's core value. However, they are usually seen as a good step, indicating management's optimism in the future of the company. What precisely is a stock split? Existing shares are divided into smaller halves for easier accessibility through a stock split. As a result, both the total number of shares and the stock price increase. Think of a stock split like a freshly baked pizza being cut. Slicing the pizza only facilitates sharing and eating. It doesn't alter the pizza in any significant way. Put it to another way, think of a $300 stock price and a 3-to-1 stock split. On the day of the stock split, a $300 share of the corporation would become 3 $100 shares if you had one. A firm may split its shares for a variety of strategic reasons, but the most common one is that it anticipates significant growth in the near future and wants to retain ordinary investors access to the shares at a reasonable price. Additionally, employees who receive equity-based compensation like those at Tesla have easier access to the shares. According to Robert Johnson, a finance professor at Creighton University's Heider College of Business, splits are generally well received by investors as an indication that the company they are investing in is doing well. While it may be tempting to invest in an expensive stock when it is now much less expensive to do so, enthusiastic investors should ensure that the stock is consistent with their overall investment objectives. However, unless it has long been a component of your portfolio objectives, one shouldn't jump all in just to possess Tesla stock, for example. According to Stivers, if the ordinary investor was drawn to Amazon prior to the split, now would be a good moment to invest because the shares are more accessible, but only if it's a component of a well-diversified portfolio. Should you do it? Your money is distributed among several asset classes such as stocks, bonds, real estate, and the like, which respond differently to different economic and financial conditions if it is in a diversified portfolio. Doing so, return opportunity is maximized and volatility is reduced. With a market capitalization of $720 billion, Tesla's shares are currently trading at over $700 per share. By the time the stock split occurs, Tesla's stock would be trading at about $233 per share if the price remained the same. Electric claims to be an American news website devoted to renewable energy and electric vehicles. Electric is renowned for its broad, favorable coverage of Tesla in particular, as well as electric vehicles in general. Musk revealed on December 28, 2021, that since early November, Tesla stock sales have brought in a total of $16.04 billion. This could potentially be a fantastic time to buy Tesla shares if the business keeps growing. Tesla even formally launched its German plant close to Berlin on March 22, 2022, to complement its auto assembly factories in Shanghai, Texas, and California. Notwithstanding the snags and obstacles brought about by the pandemic, which did in fact impact the global economy, it might be a smart idea to invest in a certain firm following a stock split if you have been thinking about doing so. Splitting stocks typically indicates a company's health and suggests it would be a worthwhile investment. They're also more reasonable due of the reduced price per share, and you might be able to purchase more shares. But keep in mind that you should treat a firm you're investing in after a stock split with the same rigor and curiosity you would any other. Even though a stock split may be a positive indicator, you should always conduct due diligence before investing in any business. If you like this video, check out our other videos by visiting our channel.